Deven Choksey also joins us on the show. Hi, Deven. Good to be speaking with you. I wanted to begin by discussing Biocon with you because this morning there's a brokerage note that has come through, and Jefferies has actually downgraded the stock, saying that there are a lot of moving parts to this company and perhaps the risk reward is a bit unfavorable given the leverage situation as well. Is Biocon a name that you track actively and have a view on?
Yeah, good morning, Anisha. No, we don't keep, I think, active tracking on Biocon. So I think, but in general, I believe that I think the what is the observation which is felt out, I think is correct. I think that is another reason for which I think we are not tracking this company because there are multiple areas where probably I think we don't have too much of clarity in the business from this company, and that's the reason for which I think we have stayed away from it. The potential of the business, I think, has always remained high as far as I think the Biocon therapeutical segments are concerned. But somehow or other, I think we haven't seen the kind of traction which one would otherwise see from the business all so far. So that's the reason for which I think we have stayed away from covering this particular stuff in the portfolios.
Okay, fair enough. Meantime, Deven, morning, you've got the management of HDFC Bank clearly articulating their preference for earnings growth over loan growth or market share. Anything that stood out from you, according to you, from the management of HDFC Bank?
So yeah, one good morning. Well, I believe that I think that's the right thing to do. Given the size of the bank, I think they need to be extra careful about expanding the book in hurry. And that is what I think this management has confirmed that they would not be expanding the book in hurry. They would be managing their liability side in a systematic manner, and probably I think want to focus more on having a low cost deposit, and on the other side the loan growth, which is more on the secured side than on the unsecured side. That is what I think we gather from the underlying tone of the commentary that is coming out. uh, what probably I think we haven't got like more, we should have got little more clarity about the kind of fintech use in going coming period. That clarity probably is not forthcoming, though I think the assurance is there about creating a significantly large amount of digital interfaces for acquiring the customer as well as for disbursing the loan, which is a cost-effective medium. That is what has been, I think, promised. But I don't see, I think, too many things coming up on the fintech side. So that is one area which one will have to look around for.
Sure, point taken. But since we are keeping it with the banking sector, I wanted to bring in other private banks into the discussion as well. ICICI Bank has been outperforming. Do you think that will continue the way? And let me also add Kotak Mahindra Bank and Federal Bank, wherein these management rejigs have happened. While it's positive for Kotak Mahindra Bank because the clarity has emerged, do you think Federal Bank can react negatively because KVS Manian was a front runner for leading that bank too? Devin, the question is for
Uh,
you.
yeah, sure. I think I'm not too sure about I think the federal bank aspect and the TVS Union moving into that particular bank because all said and done, even if I think there's some high level banker moving into this particular bank, ultimately I think for growth in the business, you will require the strong balance sheet. And I believe that I think it makes sense for anybody to stay with likes of Kotak, where the promises are, I think, far bigger than anything else as far as I think the balance sheet strength is concerned. So from that perspective, I would still prefer to see, I think, the Kotak Bank as a preference from the investor's point of view. This bank has been cautious, like HDFC, in expanding the loan book. They've been measuring their growth as far as I think the activity goes on the expansion side, be it on the corporate lending side, be it on the personal lending side. I think they've been measuring their growth. So that is a good thing to do. Maybe as I put across the point, the similar situation out here, whether I think visibility on the fintech side for expanding the distribution reach is coming forth. I don't think that I think it is immediately seen by me at least. So from that perspective, I think that is a miss. I think if at all, I think one want to call it as. But otherwise, I think from the business side, I buy the point that I think they are more prudent in lending and probably I think they are systematically expanding the book. ICICI similarly, I think hasn't been showing aggression beyond the point. On the contrary, I think they have been managing the balance part of the business by way of acquiring the deposit at a cheaper cost, and at the same time, I think expanding the book on the other side in a balanced portfolio, be it corporate, SME, MSME, and the retail book. I think all of them are being expanded in a systematic in a balanced portfolio. So one would tend to buy the argument for buying into the ICICI Bank given the visibility of growth rate of around 20% on a cumulative basis for at least next 3 years or so.
But Devin, within the entire chemical space, there was this rekindling of interest that we had seen over the last few weeks. Are there any names that stand out to you within specialty chemicals or other arenas as well?
And I think the in the last 2 3 quarters, the challenge has been on the input cost side, and most of the companies carried the balance sheet inventory of a higher cost. Even though systematically one has seen the sliding down of uh, the raw material cost for them, I think that benefit is now getting started as far as I think most of these specialty chemical companies are concerned, as we gather, be it UPL, be it Deepak. I think they are all basically getting into that mode where probably the stability in the price along with the stability in the input price is now giving them the advantage of both the demand offtake as well as I think margin protection. In my viewpoint, I think the commodity nature of business probably would demand a very careful look as far as I think the forward path is concerned. Some of the companies remain distinctly clear and positive in the business model, and that could include the likes of UPL particularly, where I think they have seen the worst of its business. Probably, I think things are likely to remain better in not in current year, but maybe the next year's financial year starting. I think things should relatively remain better. So that's one area where probably I think we look at. Otherwise, I think there are other companies which are in small pocket in the niche areas. They continue to operate, likes of Anupam Rasayan, likes of Ami Organics, likes of Lakshmi Organics. I think these are some of the companies in different pockets in which they are operating. They remain relatively, I think, more stronger play. Even likes of PI industries, I think, would remain probably, I think, relatively more stronger play going forward as we see it. So I think one will have to remain relatively more selective in picking up these businesses in the portfolio.
Okay, fair enough.
There's a large trade which is expected to happen there, Devane, 24%. The stock always used to trade at very expensive valuations despite not getting supported by the fundamentals and earnings performance because the float was very low, right? 75% was held by an MNC, it was only 25% in the market. But now it seems like that's expected to reverse and 24% will come into the markets. Do you think this will lead to the real price discovery of Whirlpool and that would mean a significant derating?
According to me, I think the business has to catch up for this company. I think on one side, we have seen the domestic players playing a significantly large role in taking over the market shares. We look at, I think, the of later entrants like, I think, the Havels, the way in which I think they've been taking over the market share in the white goods. Along with that, I think the others ones like Voltas and others. I believe that I think this is one area where probably I think this company has missed out. Not completely sure whether I think they have got a case here, I think, to expand the size of the market. Though the market remains extremely potential because higher amount of discretionary spending in the hands of individuals for the products, I think white goods products, if they are manufacturing. I would think that I think some strategies probably will have to get corrected, and that's where I think one would train the focus on management. I don't think that immediately infusing the liquidity by way of selling the stock and allowing the market to discover the price, I think would make too much sense. Maybe I think in the short term, the market may remain slightly euphoric, but over a period of time, I think ultimately fundamentals in the working of the company would matter.
All right, Deven, good to have you on board. Thanks much for taking time out and joining in with your take on the markets.